It was a huge week for stocks, and after the two big events for the week, the captain or king of the stock market, Nvidia, had another hollow candle, and there's even volume to support it. So where's the stock going to go from here? You might be wondering because the S&P closed at a record high and has only had one weekly lower low ever since October. And for the NASDAQ or QQQ, we also had a record close, but there has been 6 weekly lower lows since October. So where is the NASDAQ and the S&P going to go? Well, if we look a little bit closer, there is a pattern here where after we saw volume and price action, similar to what we're seeing right now, we had a period of consolidation or sideways in a new blue sky territory. Is that where the stock is going? Well, we probably want to understand a little bit more about who this company is because it's largely driving where the stock market's going. S&P is strong, NASDAQ is softening, but in the last 4 years since the market low, we are up 25% annualized since then. That is trouncing what we normally do at about 9 or 10% per year. So is it really the Magnificent Seven, or is it more like the Blazing Two or the Tepid Five? I like the Blazing Two. Who are these two companies? It's NVIDIA and it's Meta. So who are these companies? Because NVIDIA's CEO overshadows Powell as AI bots, blah, blah, blah. This is after their GTC event, or the biggest event for the year. Who is Jensen Huang? Well, he's a guy who always has a leather jacket on with a black t-shirt. He always has a different type of jacket on, always looks cool, and he's often holding a GPU. With Jim Cramer this week, he revealed that a 30,000 new GPU they're going to be producing is going to be the next huge thing coming to AI and the whole revolution. So what this article really talks about is that investors are focusing on two, NVIDIA and Meta. So if we look here, these stocks just year to date, and it's currently March 23rd, NVIDIA is up by 91% and Meta's up by 45%. These stocks have been crushing it. So the story for this week is really about 11 hollow candles, meaning there is an expansion with buyers or volume. Another way of saying this is that we have more continued strength. And this weekend, I went all the way back to 1982 to see what would happen, not just until the end of April, if the pattern continues of higher highs, higher lows, which is exactly what we've been doing so far. This is exactly what an expansion means. It means we're going higher. And hollow candles mean that we're closing higher than the previous bar. So by definition, that means an expansion, or it means continued strength. So if we think about this, Newton's first law says that an object in motion will continue in motion until something with an unbalanced force happens. So we talked about this. Even though the NASDAQ and the S&P might look a little bit shaky on their own, NVIDIA is just dragging the market higher. So we have a great show for you this weekend, including a lot of our keynotes we're going to go through, and we have the key dates. We also have SPY levels, and I'll even have a couple stock picks for you at the very end. But just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly appreciate that. All right, so we got a lot to go through. Let's push forward. So it's really a story of continued strength. What does that mean? It's Newton's first law. So until we see a pattern break, which for me would mean a weekly lower low for SPY, but notably a monthly lower low, and for NVIDIA, it just means a full candle. Man, there's been more money lost preparing for the recession than there actually being one, or the big correction, whatever. In the last 10 years, NVIDIA is currently up by 20,692%. SMCI, 5,000. AMD, 4,000. Broadcom, 2,000. Whoa, it looks like chips make money. Yeah, like thousands of percent. So we've been talking about that continued strength pattern, and I went all the way back to 1982 to actually see what this means. So we can think about this a different way, but right now, Volcker declared victory on inflation. Let's go back to that slide to just refresh you on what that means, right? Volcker declares victory on inflation. We get the continued strength. Powell declares victory on inflation. At the press conference today, he had opportunities to be more bearish, and he showed up more bullish. So this scenario looks more and more likely. The yellow line is where Volcker declares victory on inflation, and then not just seeing until April, but it's actually a 39-week rally until we get a sideways action or a dip, which means right here. But ultimately, we do go a lot higher. So if this repeats, we're looking for roughly September of 2024 to be the date where we would start to go sideways to down, corresponding with the election cycle. Very interesting. Another way to think about this is that the template that I shared at the beginning of the year, or the monthly chart, which will be important because on Thursday we close out the monthly candle. We're going to have a pattern of higher lows and higher highs, like 2020. In 2023, it's all we've had. We've only had green candles, higher lows, higher highs, or continued strength. And the reason why I think the move might actually be even a little bit higher is because we have these really big tailwinds, like declaring victory on inflation. And the market tripled from here, from about 111 to like 330 before we ultimately got like a 30% correction. It went up hundreds of percent. It tripled. And if we go to here now, oh my God, from the time we formed a new all-time high in 1995, if that's what's really happening, and it appears like that's what investors are focusing on. Even Apple has all this news about AI, right? They got Google going on their phone. They're looking to partner with Baidu. Yeah, because they're getting left in the dust. And like we talked about last week, and they look more like Coca-Cola than a growth stock right now. So in 1995, when these stocks broke to new highs, we went up by an incredible 220%. And remember, the gains were incredible. So 10 years, NVDA, Supermicro, AMD, Broadcom, Microsoft, they're all up by over 1,000%. Otherwise, it's Ozempic, right? Losing weight and semiconductors are what really drive those massive returns. So if that's what's currently driving the cycle, and in 1980s, we went up by hundreds of percent, my normal pattern going back to 2020 says a lot higher. I was looking at 5,600 as my target, but actually 62. And that number is interesting because if we now go forward a little bit, we're getting more evidence on the 10-year Treasury note that this is a head and shoulders pattern. So if it plays out and this continues to go lower, notably losing this 50 MA, it means stocks should go up. Long-term inflation expectations are going down. And after Jerome Powell spoke, this is a really big signal. It's a big signal. And the other thing that's interesting is that the S&P is now back inside a green light on the annual and the monthly levels by getting back above 511. And QQQ rejoins that by going back into new all-time highs, back above 441 and 410. But we're going to open a new a new month next week. So make sure you watch next weekend's video. Maybe you want to subscribe ahead of time to make sure you don't miss that. S&P in the last 4 years is up by 25% compounded. Whoa, right? Incredible. We could be going significantly higher. And run with the bulls. Everyone's getting bulled up, right? That's the theme for this weekend. Everyone's getting bulled up after Jerome, right? Oh yeah, new all-time highs. How high? Run with the bulls. Don't worry about the S&P until we hit 6250. That's the number I talked about in my target for my 2024 prediction. Oh my God. And now we got a big bank talking about it. Same bank, SocGen, is now among the biggest bulls on US stocks. New year-end target of 5,500. Whoa, right? My target of 56 is now looking a lot more realistic. And it's not like I guaranteed stocks would go there. It was just a prediction if the pattern continued. Here's another one. Why one market vet sees the stock market gaining 26% for a long-term bull market. And Ed Yardini is calling for the market to go to 6,500. I think this is a long-term bull market. Whoa. Remember, we got some stock picks for you at the end, so make sure you stay tuned. In 1995, soft landing, the Fed cut, then held for 3 meetings. Hey, it looks like the market wants to have its cake and eat it too, right? We're currently baking in 3 cuts. Jerome Powell pretty much confirmed that. If it's 1995, we went up by 220%. Incredible. And we even see an IPO pipeline coming back with some technology stocks, like Reddit actually soaring 48% on its debut as AI pitch gets warm reception. Whoa, incredible. It is incredible. And then we're also seeing breadth and depth, right? We're seeing breadth among cyclicals relative to their 50-day moving average. We're seeing energy, materials, financials all moving up. Financials actually now in all-time territory, new all-time highs. Risk appetite highest since November of 2021. Global growth expectations are at a 2-year high. Stock allocation at a 2-year high. Big rotation into Europe, emerging markets, and financials. Cash levels up to 4.4%. And we see the biggest short reduction since 2024, meaning the beginning of the year. They're back down here to 194 contracts. They're like, oh crap, Jerome was bullish. But retail doesn't really agree. They're only currently 43% bullish. The less they've been in the last month. Okay. And the market has gone nowhere in terms of fear and greed. We're currently at 72. A week ago, we were at 72. A month ago, we were at 73. So the market is actually cooling off in greed, not extreme greed. Interesting. So if we're going to push higher, I don't think earnings are really going to be a catalyst this week. GameStop, whatever, maybe Rumble, but like I don't really think so. These are not really big companies. Not that they're insignificant. They're just not going to move the market. So here's those S&P levels for this week. You can pause the video if you want to see them. Moving forward to the key economic dates, we got GDP coming out on Thursday. Pretty sure it's a revision. This will be important because the market is currently trying to price in productivity gains, and we should see that reflected on the GDP. However, the market's going to be closed on Friday. We're going to close the monthly candle out on Thursday, and then we're going to get core PCE on Friday morning. This is what it says right now. And Jerome Powell speaking when the market's closed. And we're going to have that monthly candle closed out going into April. That'll be very important. And this will be important because right now, if we look to GDP Q over Q, which means quarter over quarter, we're currently at 3.2. And when we look forward here to the GDP now, for the fourth quarter, we got, why is it all selected now? We got 2.3. So is this number going to get revised down? Is the market going to have a negative reaction? It's the third most important catalyst. I think core PCE and Jerome will be, but this will be after the market closes. This number right here looks encouraging. Need to see what that year over year number would be. It should be coming down if this is currently expected to go down. All right. So after Jensen, what really happened? Well, he says that he announces a new chipset. We need bigger GPUs. Got to spend more money, right? Yes, we're going to get smarter. He had a lot of really good interviews. Encourage you to look into that if you want to read more. Bill Gross laments excessive exuberance as stocks hit record. Oh, yes. But we're not into extreme greed. Potential Apple AI partners. Apple's like, oh my God, this GTC from NVIDIA is really putting pressure on us when we have our WWDC, or Worldwide Developer Conference, in June. They're talking with almost every company like Google, OpenAI, Baidu, Cohere. They're like, man, we're scrambling. We're playing catch up. Yep. Also really interesting to see some bears flip recently. Chase CEO Jamie Dimon and billionaire hedge fund founder Ray Dalio admit they got the warnings on U.S. economy wrong, at least for now, right? There's that optionality for now. Hey, we were right all along. We were big bears, but they're flipping bull. Ray Dalio says the U.S. stock market doesn't look very bubbly. Interesting. This is the chief economist at Goldman. I think it's Jan Hatzius. He's saying that the economist who predicted the financial crash and soft landing says AI will be good for the U.S. economy, but will destroy employment in some areas. Cool. It's going to boost GDP, though, right? Productivity gains. That's exactly what we want. And then after Jerome, what happened? Well, traders, for traders, there's no debate about what to do right now, and that's buy everything, right? Risk on. Let's go. Fed could slow pace of quantitative tightening fairly soon. Very notable comment because he didn't have to talk about this meeting. He could have deferred it to next time. This is dovish or bullish for stocks, which is part of the reason why we saw the 10-year note actually close down. We also got an SEP, so there's an asterisk here. Next one comes in June, which is when we're expecting a cut. So if we're expecting a cut, we talked about it being at a meeting with an SEP because they will have to justify a cut with the data. And we're starting to see the evidence of what that could be now. Here's the SEP revision. I'll make it really simple for you because you probably don't know what this stuff means. Where there's changes, I've highlighted. So they raised the 2025 median estimate for the federal funds rate from 3.6 to 3.9, but going out to 2026, it's basically gone up by 0.2. They've also raised some inflation expectations and GDP expectations. To think about this another way, here's the dots, if it means anything to you, but I'll make it simpler for you. Powell says Fed's inflation view stays unchanged. Fed pencils in 3 rate cuts for 2024, same as before. Unchanged as FOMC awaits confidence on inflation, but Jerome didn't really do anything. Powell says appropriate to slow QT fairly soon. Central bank boosts economic growth through 2026. AI boom, baby. On the flip side, we got a couple of bearish articles. Bitcoin faces sell the news moment as record highs set in. And we have this head and shoulders pattern with 69,000 being a neckline, which could ultimately form a rejection on the Bitcoin. We talked about the 10-year note, which is actually a very positive sign for us. But we also see there's always some bears out there, even though more are converting to the bull side. S&P 500 is bizarrely overvalued and can crash 49% as recession sets in, elite strategist says. And this is from Paul Dietrich. And then finally, we do still have these alerts. We got DOG, PSQ, SH, and SOXX, which all tell us that we want to be receptive to a market reversal on a weekly and now monthly time frame. These are still currently whisper alerts, so there is a reversal establishing, not yet established. We've been talking about a warning for a while, but we're just not seeing it materialize. American debt stings like never before in new era of households. We're starting to see delinquencies rise a little bit, and that's definitely adding some pressure. So that's pretty much it. Trying to wrap the video up here because I'm aiming to make it shorter going forward. But here's the key notes. Maybe we'll have a chance to look at a couple of key charts as well. So the weekly charts are still overbought. We talked about all these ones, but largely need to reset this pattern, or we need to see 2 consecutive lower lows and a trend change. S&P only has 1 lower low since the beginning of October. We talked about that. It's incredible. 1982, man, it says we could rally till September of 2024. My prediction says, hey, this is great. Warren Buffett quote says, we want to be receptive to being patient. 1995, 220% gains. 1982, 150% gains. BTC could still be a leading indicator. And here's where I want to show you. Let's just get rid of some of this stuff here. All right, there we go. Let's get that back. Let's go back here to the chart. Let's go here to BTC USD. And there could be a potential double top here. So if we look at the all-time high, which we just hit, so resistance is still currently acting as resistance. Depending on where we close the month at the end of the week, what's going to happen here with the Bitcoin? Is it going to be over the all-time high? Is it going to be below? Are we going to have to form a handle or form some kind of back test before we go back up to highs? Or is it just going to rally over and go higher? That's like really important. Let's look at a template here. We got the Dow Jones. On the first attempt, the Dow Jones just goes to new all-time highs on the first attempt. There's no back test. If we looked at chips, which started the rally, they form a back test, and then they go to new all-time highs, which means we form a cup with a handle, and then we go higher. I think that'll be very important because more charts are starting to have this test to new all-time highs. RSP, or equal weight S&P 500, we are running a test here. It's currently over the all-time high. We'll see if it holds up. We can now also look at something like an XLF, which is now right here at all-time highs. Is it going to hold or be a double top like the Bitcoin, at least for now? We can also look at the New York Stock Exchange, which is just powering up. 2,000 stocks collectively, just pumping it. Or something like a CAF, which is the strong stocks from the Russell, where it looks like we're just flagging out here, right? Cup, a little bit of a handle. It just wants to go up, baby, right? Just wants to rally. So those are the notes. And then Apple and Tesla are oversold. Those are notable ones. I want to see if they can shake off bad news and start to rally. The DXY weekly, there's a concern on the dollar. There's been a concern for a while. On the monthly chart, going back to 2011, we're pointing up. But on the weekly chart, I'm noticing that the coil is getting really tight. When a coil gets really tight, it'll usually explode or explode. And what's notable here is that we currently only have, let me just double check this. So here we have, we close at 103.44. The 50 MA is 103.44. Oh, we actually now currently have 2 weekly candle closes over that 50 MA, which could be a potential trend change. So if we break this downtrend and run a test to 106.50, that's not good for stocks. Usually when the dollar goes up, stocks go down. So that's important versus that head and shoulders we're seeing on the 10-year note. There we go. We got some key dates. I'll update you on all of these this week. So I encourage you to subscribe to the channel if you want to stay up to date. And then there's the key levels. I will also update you on those this week. Thank you so very much for tuning in. The 2024 predictions now on the left-hand side. If not, I'll see you at 9:15 a.m. on Monday. Thank you so much.